see what we got going on here. Welcome back, everyone. All right, and let's see what we got going on here. All right, good. So we are ready to go. We are live on YouTube as well as on TikTok. So as you guys can tell from the okay, hold on one second here. Let's see if we can get everything set up properly here. All right. So as you guys can tell from the title of the live stream, this one we're gonna be in this live stream today. We're gonna be talking about how to use indicators, because a lot of times when people sign up for my course that I have available on Udemy, um, or when they watch me here on YouTube Live or on TikTok, they see all of these. They see all these lines here in these little graphs, and they're always wondering, like, what is that? How am I using it? And different things like that. So what I'm going to be doing is we're going to be looking at advanced auto parts stock today. And I'm going to be showing you guys like really like what indicators I use, how I use them, and I'll also be explaining why I use these particular indicators. Now, for anyone who's watching my live for the first time, I want you guys to understand something. Uh, I am an instructor. I have a course on Udemy on teaching people how to trade stocks. I'm not an influencer. I'm not trying to really promote myself. That's why you really won't see my name on the screen. You won't see me really in front of the camera a lot unless I'm doing a live. So a lot of these videos are meant for people that are interested in learning how to trade. I always recommend that they go over to Udemy. Either they can take my course or take anyone else's course. My name of my course is Stock Trading Simple Beginner Guide. But a lot of times, especially now that I've just kind of really joined social media, I'm not somebody who's typically on social media. I'm noticing a lot of influencers and a lot of people on social media are showing you charts. And when they show you their charts and they're telling you, oh, you should buy this stock or whatever the case may be, their charts typically look like this. There's nothing on their charts. It's just like a blank screen. And then they just come across and they start like drawing a line here, and they'll do something like this and they'll draw another line here, and then they'll say, well, you should buy here, sell here. And if you're somebody who's new to trading and you just see somebody look at a chart that's blank like this and they tell you, oh, here, they draw a line, they say buy it here and sell here, you're looking like, what the heck are they talking about, right? Because you hear that you can make a lot of money in trading stocks, but you want to be able to look at a chart like this, which is how it normally comes. Let me let's take this one out of here. So this is how a chart normally looks like when you first sign up to somewhere like TradingView. Your chart's going to be blank, just like this. Only thing you have is your candlesticks, right? And when you look at this, you're sitting here like, what the heck am I looking at as a brand new trader? So I'm going to zoom in on this right here, and I'm going to show you what you're looking at as far as how to read a candlestick for anyone who's a brand new trader. So if you're somebody who knows how to trade, you're familiar with trading, you're probably going to get bored with this live and you're not really going to watch it. But if you're somebody who's brand new to trading and you hear the term candlestick chart and then line chart, then that's what they're talking about. This is a candlestick chart here, and this over here is what we call a line chart. So if you notice with this particular line chart, we're on a daily time frame, right? So anytime you see this line right here, this line that's going vertical up and down, this little gray dotted line, that represents 1 day. So right here on our line chart, so if you look at today's date, which is the 13th, the price for this right here, if you look across right over here, you'll see that the price on that one is $61.81. So we know that this candlestick, like during the day for the 13th, the price closed at $61.81. After the market closed, the price went up post-market. This is why you see the post here. I'm sorry, those on you on YouTube can't see that. Let me drag that over just a little bit. Okay, so let's see here. So yeah, you guys can see it now. So so here you can see, if you look at this, let's move this up. So I'm trying to make sure everybody on YouTube can see this. So this line right here represents, and on TikTok, you guys can't see this on TikTok. So let's bring that down just a little bit more, because I want you guys to be able to see the dates as well. All right, so cool. So you guys can see the date and the time. Okay. Yeah, guys, this is what happens when you're multitasking a lot. All right. So here you guys can see this line on a line chart represents Wednesday, the 13th, August 13th, Wednesday, right? So, but if you look right here to your right hand side, you'll see that purple, the price ended at $61.81. After the market closed, the price went down. Okay, let's bring this down. So the price is right here at $61.81, right? So that's what the price closed at the end of the day today. So if you look at a line chart, only thing you know is that at the end of the day, the price closed at $61.81. Now, if we switch this line chart over to a candlestick chart over here, so this one candlestick right here, this green one, represents the entire day, which is August 13th. Now, how you read this and how do you know what's going on with this? Because this candlestick looks very different than this line chart. And this is why you'll notice when you see traders, we don't use the line chart. We normally use our candlestick chart. Now, I'm going to show you why. Here, when we switch over to the candle chart, when it's green like this, it basically lets us know. You see this, the bottom part of the green candle, right? That lets us know that the price for this stock opened up right around here at the bottom part, which is priced at $59.13. That's where it opened up. Okay, that's where the price started at 9:30 in the morning. The price went down. You see this little stick hanging right here at the very bottom of the candle, this little skinny stick. So that lets us know this is where the price started because it's green. It went down as low as $58.96. That's where the bottom part of that little green wick is. It went as high. You see this little, you see where this top wick is right here, this little line at the very top. It lets us know it went as high as $62.34, but the price ended over here at $61.81, which is the top of the candlestick because it's green. So whenever it's green, it basically means the price opened up low, but it closed higher than where it opened up. So when you're looking at a candlestick, it gives you a lot more information in regards to, you can tell how much movement that stock had for the entire day. Okay, so we know it opened here, it closed here, it went as low as this point, and it came as high as this point, but it closed over here. When you look at the line chart, only thing you know from the line chart is it closed at $61.81. There's no other information that you can tell from this line chart. And this is why people always talk about, this is why every trader typically uses the candlestick, because it gives you a lot more information. All right. So I just want you guys to be aware of that. The next thing I want to talk about is going to, now that we've covered the candlestick, so you guys understand how to read that. Oh, also, let me explain to you the red candlestick. It's just basically a complete opposite. Okay. So let's take a look at this red candlestick over here. All right. This is going to be the one for Tuesday. Because remember, we're on a daily time chart. So when you're on a daily time chart, that means each one of these candlesticks represent a day. If I went to, for example, if I switched over to the 15-minute time chart, you'll notice the candles are a lot smaller. But what that means is every single one of these candlesticks represents 15 minutes of time. All right. Um, so, like I said before, this is something that I'm talking to new traders, beginner traders. If you're somebody who's well versed in trading and you understand all this, you know, like I see on TikTok, don't leave anything like, "Oh my gosh, dude, you're talking baby language." No, with these lives are really targeted towards people who are new to trading and really don't understand um, some of the basics, the foundation of trading. So I'm kind of doing this because a couple of my students asked me to. So with the red, when a candlestick is red, what that basically means is, like here with this particular one on Tuesday, the price opened here and how do I know that the price opened up here? Because the candle is red. So I know that the price opened up high and it closed lower. So if the price closed lower than where it opened, the candlestick is going to be red. If the candlestick closed higher than where it opened, then it's going to be green. So I automatically know that the price opened up here roughly about $59.67. It went as high, which is the little top part of this red candle here. We know it went as high as about $60.85, and we know it came down as low as $58.84, but we know that it closed at $59.13. So we know it opened up higher. It went high, but it came back down low and it closed lower than it opened up. That's why the candle is red. Same thing like here. So if you notice with this big candlestick here, and let's bring this down so the people on Instagram, on TikTok could see it. All right. So as you can see with this candlestick here, so the previous day, the price closed at $66, right? Which is Wednesday the 23rd. The price closed at 66.46. The next day, the price opened up all the way up here. Okay. And this happens sometimes where there's a jump. So as you can see, the price closed at 66.50. It opened up the very next day at $69.96. And now a lot of you guys who are new to trading will say, well, how does that happen? Well, you see this right over here that says where we looked at this price and it says $61.81. That's where the price closed today. And you see where it says post market means you're able to trade when the market is closed. At 4:30 the market officially closed. If you have a broker like E-Trade or Interactive Traders, you can request the trade after hours. Okay. And that's like for the first like hour and a half after the market closed, you can still trade. And big institutional traders, that's what they typically do. They trade after hours. And after hours, the price went up roughly about 80 cents, right? It went up to $62.50. Now, the same thing applies in the morning. So the market actually generally opens up to the public at 9:30, right? But you can actually start trading, I believe it's at 7 o'clock in the morning. If your broker allows you to, you can start doing what they call the pre-market trades. So what would happen here is the price might have closed here. Post-market, the price could have gone up, or during the pre-market, the price went up. And when the price opened up at 9:30, the price was higher when it opened up to the general public. And then but it opened up all the way up here. It opened up here. It didn't go any higher. It just dropped and it came down. So the price opened up here and it dropped lower than where it opened. So we know that this right here was a red candlestick. That's why it's a red candlestick, because the price opened up here and it came down lower than it opened. So it's red. So that's just the basics for right now. Okay. So we're going to move this back up right over here. And let's see for TikTok, because they don't get to see the full screen unless I move this back a little bit. You guys may not be able to see all of that detailed information on TikTok, but yeah, this should be good for you guys. All right. So now we were talking about indicators, because this is what this live is about. We're really going to be focusing on indicators. So if I show you a chart like this and I say, well, I'm going to teach you how to trade, and this is the only thing I'm showing you, you wouldn't necessarily know what the hell's going on. Is the stock going up? Is it coming down? Like, what's happening with the trend here, right? So when you take my course, one of the first indicators that I teach you to put in is going to be your volume, right? I don't normally use the volume that much, because the volume just lets me know, if the sellers won or if the buyers won. So let's take that one out for right now, because volume is a little bit more advanced and it's going to take up too much of our time. So let's go with the 3 basic indicators that you need. And you would hear a lot of traders tell you, you don't need to have more than 3 indicators, because the more indicators you have, the more confusing it becomes. So the first indicator that I always tell my students to put in would be support and resistance. So if you guys notice, there's no lines on this chart. We're looking at this on our daily time frame, right? So when I hit support and resistance here, you see these red lines and blue lines. The blue line is the area of support. The red line is my area of resistance. Okay. And let me show you why that's really important. Here, where we have this blue line, which is this area of support, what that means is when the stock price comes down and it hits this particular area, there's a good chance that the stock is going to come down, the price is going to hit that line and it's going to bounce up. That's why they call it an area of support. It's pushing it up. It's giving it support to push it up, right? This red line over here, we call that an area of resistance. Now, when the stock hits that area of resistance, like you can see here, it typically pushes it down, because it's saying, hey, you can't go any further. We're going to force you back down. That's the resistance. Support, resistance. Now, when you see a stock like here at this particular candlestick, which is going to be June 7th, Monday, June 7th, when you see that the stock price actually breaks through and closes above that area of resistance, the chances that that stock price in the next, because we're looking at this on a daily time chart, the chances are in the next 5 days for this stock price to come down and break down through it is very slim. And it did not happen. It just continued going up. Now, keep in mind, there's a very important word that I use. It must close above that area of resistance. So whether you're looking at it on our 1 minute, 5 minute, 15 minute, or 30 minute, or even a 1 day time frame, once you identify an area of resistance, you want to make sure that the stock goes above it and that candlestick closes out before you buy it. Because as you can see here, let's look at the next candlestick, which was for Tuesday. The stock actually went down, and that's why we have this little wick right over here. Matter of fact, let's go ahead and use the demonstrator one. So yeah, you guys can see this. So you see this little green line right here that's coming at the bottom of the candlestick, which is the wick. The price came down and broke through that area of resistance, and then it went right back up, and then it closed up higher than it went. So if this came down and it closed below it, that lets me know that there was a chance that the price was going to continue coming down. So this is why we wait for it to close above it, because there are times when on an area of resistance where the stock is going to go break through it, but then it comes back down and it closes right below it. Okay, because just because it breaks through that area of resistance doesn't mean it's going to stay above it. You got to wait for it to close out above it. So these are your first indicators that I use: support and resistance. So for example, if I was trading this particular stock, I would buy it when it hit that area of support, and I would buy it right here when it hits that area of support, and I would wait for it to go up, and right when it gets close to this area of resistance, I would sell it. Right now, if I bought that stock here, what I'm going to do is I'm going to buy it here right at that area of support, and I'm going to put a stop loss right up below it. So this way, if it doesn't go and bounce up and it just breaks through that area of support, I would cut my losses, because I know once it breaks through it, it's more than likely going to continue coming down. And just like if I bought it here, and once it gets close to this area of resistance, I will sell it right around here before it touches that area of resistance. And then if it bounces back down and gets pushed back down, I already took my profit, and I can buy it again when it's lower and sell it again when it's higher. But if I sell it here, like if I bought this particular stock, let's say I bought it here at this area of support and the stock went up, and then I sold it right here at this area of resistance, and then it broke through the area of resistance like it did here, the next day I'm just going to buy it again and then ride the waves up. But at least I take my profit. One of the things I tell all of my students: you don't lose money in the stock market unless you sell early. All right. Like, look, I'm sorry. You don't lose money in the stock market unless you sell while you're in the red. All right. So I may buy a stock thinking that the stock price is going to go up. Let's say I bought this stock here, right, at this price, which is $51.84. Now I bought the stock thinking that the stock is going to continue going up. Now the stock comes down to $45. If I sold the stock down here at $45, I lost money, because I bought it up. I bought it up here thinking it's going to go up, and it pulled back down. But if I held on to it and I waited for it to go back up into the green and I held on to it, I made money. So just because I buy a stock and it turns into the red and it goes into the red and it goes in the opposite direction, it's unrealized loss. It's an unrealized loss. Just like if I bought the stock here and the stock goes up, as long as I still own the stock, it's unrealized profit. So that's why you'll notice when you're trading, it says unrealized loss and unrealized profit, meaning your stock is down, it's a loss, but it's not money that's actually out of your account yet, because you haven't sold. The minute you sell while you're in the red, that's when you lose. The minute you sell, you're in the green, that's when you win. So that's it. All right. So this is one indicator, but even with just this one indicator, I can't clearly tell if I'm going to buy or sell this stock, because I know this is a area of resistance, area of support, right? But I don't know if the stock is really in a strong downtrend where the stock is going to continue going down and probably break through this area of resistance, there's nothing that's indicating to me that this is a strong uptrend and the stock is going to break through this area of resistance or break through this area of support that is in a clear downtrend. So what other indicators can help me, right? The other indicator that we're going to look at is our moving averages, right? So our moving averages are these lines over here. So let's move. So the moving averages is the green and red line that you see here. That lets me know if we're in a clear uptrend or downtrend. And how do I know that? My moving averages, and like I teach my students, they have to be color coded. They're color coded because what happened is whenever the green line is on top, like here, the green line's on top and it's pointing straight up, red line's at the bottom and it's pointing up, right? That lets me know I'm in a clear uptrend. Let's say the green line was on top and is pointing up. The red line is here, but it's moving sideways. I'm not going to be in a clear uptrend. If the green line's on top, but the red line's here and it's pointing down, not in an uptrend. If the green line's on top and it's moving sideways and the red line's at the bottom and it's moving sideways, I'm not in an uptrend. I need the green line to be pointing up like this, and I need the red line to be pointing up like this. Even if it's slightly pointing up, that lets me know that we're in an uptrend, right? When the red line's on top and the green line's at the bottom, like in reverse, then we're in a downtrend. So here, if I'm looking at this and I have my moving averages here, and I see that my moving averages is here, my green line's on top, I feel very comfortable when that price comes down and it hits this area of support, because I know we're in an uptrend because of my moving averages. I'm going to feel very comfortable buying it when it hits this area of support, because that's going to let me know that the stock is in an uptrend. Now, if I bought it here at this price, which is $45.46, and I see my area of resistance here, because I know that we're in a clear uptrend and I don't see them consolidating where the green line is about to cross over on the red line, I know that this is we're in a strong uptrend. So I don't necessarily have to sell the price. I don't have to sell my stock here and wait for it to close and then buy it here again. I can stay in that. I can feel comfortable staying in this trade because we're in a clear uptrend, because this lets me know that I'm in a clear uptrend and that uptrend is continuing. So when it breaks through, look at this. So and then it actually ends up breaking through. Now, here we have a pullback, right? Now, when we have a pullback like this, we normally, the pullback normally doesn't go back below this area of resistance, which is along the line of this red line. So when I see this happen right here, that lets me know that, yeah, it pulled back, it went underneath it and it went back above it. But chances are that this stock is going to probably start into a downtrend. So once this happens, I'm going to basically sell. But I wouldn't necessarily sell here. Once I see a strong big red candle like this one, I would probably sell. All right. That would be your indicator right here to sell, because this is a big red candlestick that lets you know that, okay, we're probably going to be in a downtrend from here, because a lot of people, this was their area to take profit. And once the price got up here, people took their profit and everybody just sold off. All right. And that's exactly what happened. Everybody else got scared and the price went down. Now, let me show you what happens when we're in a downtrend. All right. So, for example, here we can see that we're changing. We were in an uptrend. We had the red line crossover, right? The red line crossed over. The green line's on the bottom, red line's at top. They're both pointing down. And look at this, the stock price, it's steadily going down. We have an area of support. See, when you have that crossover and you're in a clear downtrend, you have an area of support. So that should push the stock up, right? Nope, the stock broke through it. Then you had another area of support not too far from there, and it did hit the area of support. It bounced up, right? But we were still clearly in a downtrend. It hit that area of resistance right here, and it pushed the stock down and it broke through that area of support, right? So we have two areas of support that it broke through. We're still clearly in a downtrend because the red line's at the top pointing down, green line's at the bottom pointing down. And here's another area of support. It came down to touch that area of support. But this is a strong area of support because you have three of them back to back. So the price kind of hovered right around there. And then eventually it crossed over and it went into the uptrend. So so far we've looked at two indicators, right? So these are things that actually help you to understand whether or not you're in an uptrend or downtrend. I did mention this earlier about a fake Okay, so this is like another example of a really good. Let's see. This is another example of a really good downtrend. Okay, but what I want to show you is this right here. So here, yeah, we can see this on both screens. So here we were in an uptrend where the green line was on top and it was moving up. Red line's at the bottom and is moving up. So we were in a clear uptrend, right? And then it started to consolidate right about here. Okay. And when it started to consolidate here, notice what happens. The red line's now on top, but the red line's pointing up, right? The green line is pointing down. So we'll look at what happened with the stock. Did the stock automatically drop? No, the stock did not drop. The stock kind of stayed sideways because this is what they call a fake debt cross. And by the way, when the red line goes on top and the green line's at the bottom where we're about to go into a downtrend, we call that a debt cross because that basically means the stock is basically about to take a dive. It's going to die. And when the green line's on top, like here, and the red line's at the bottom, we call that at the point where it crosses over, we call that a golden cross, meaning you're about to make money, you're about to make gold, right? So here, this is what we call a fake debt cross because yes, the red line's on top, green line's at the bottom, but the red line is pointing upward. So, and the green line is pointing downward. So the stock is kind of like, it doesn't necessarily know what it wants to do. Then once we start having that indication of a clear turnaround where the stock is going to start coming down and the red line starts to point down and the green line is now pointing down, look what happened. The stock just continues to fall. See, look at that. It just continues to fall. And then here we had where it's looked like it was about to consolidate, right? And it looked like we were about to have a crossover. And this is one of the things that a lot of traders, especially brand new traders, and some veteran traders, we lose money on. And when we see stuff like this happen, we say, okay, well, you know what? This looks like it's about to happen. If I buy the price, if I buy it here, I can actually make a lot more money because it's about to cross over. I can get in there early. And guess what happens? When you get in there early and you don't wait for the actual crossover to happen, stuff like this happens. It starts to consolidate, right? And then all of a sudden, bam, you have this drop. So you never want to predict and say, well, it looks like it's about to cross over. Let me buy it here before it cross over and try to make us some more money. No, you wait for the actual crossover to happen. If you try to predict the market, you're going to lose. And this is a really good example because it closed here at $60.52 and the price opened up the next day at like $49. That's like a $12 drop. So imagine how much money people have lost who actually tried to buy in early and try to predict the crossover. Okay, so you always want to wait for the crossover to happen. One of the things I always tell my students is this: you're not a market maker. So a market maker is really the big institutional traders, people that are putting millions of dollars into the stock market. These individuals, um, they decide on what's going to happen here. So, for example, you see, uh, in order for a trade like this to happen where it dropped, there had to be millions of dollars or millions of worth of stocks that actually got dumped here. Okay. And I'll tell you exactly how many stocks right now got dumped on this particular day. Like right here, we had over, what is this? Let's take a look at this. All right. So I want you guys to take, oh, okay, you can't see the volume number here, but when I put my mouse over this, 13.8 million shares of stocks were sold. Okay. 13.8 million shares of stocks were sold on that one day. That's what caused this drop. And so these are the guys that actually control the market, whether or not it's going to go up or down. All right. And with you buying a few hundred shares or 50 shares, you're not going to have that big of an effect on the market. Another example of why you don't want to predict the market when you're using your indicators like this is, take for example, um, the every mean things ended up working out here, but let's say you are in a downtrend and you're watching the stock, it's in a downtrend, and then you start to notice, oh my gosh, look at this. The red line is about the red moving line, which is the moving average, and the green line, they're about to consolidate. They look like they're about to cross, they're getting closer. So you decide to buy it here, right? Now keep in mind, each one of these candlesticks represent one day. So you buy it here because you think that it's going to cross over. So this is 1 day, 2 day, 3 days, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. It does not cross over until the 13th day. So you stuck in a trade for 13 days and you're having anxiety because you for 13 days it doesn't cross over. On the 13th day, just the moving average, the green line actually cross over on the top of the green, on top of the red line, and then you're like, oh my God, finally it happened. Because if it didn't happen and it continued to drop, we could have another incident like we had with this particular incident, where we think that the stock is going to drop and it actually goes back up. It's going to go up, but it actually drops. So this is why I say you don't want to predict the market. Okay. You don't want to try to predict the market. You don't want to buy it until it actually has the crossover that happens. So far we've covered two indicators. We've covered support, resistance, and then we've covered our moving averages. And you see why I have them color coded. And so now you can see how sometimes, people, when people trade, why people can trade comfortably and not feel like they're putting a lot of money at risk. All right. Because we have the tools here that's disposable to us, that shows us everything. It's just sometimes you'll hear people talk about the psychology of trading. A lot of times people get a little bit ahead of the game and they want to show that they're smart, and they're doing things before certain things line up, and then they end up losing money. Okay. So the third indicator that I use is going to be called the RSI. All right. And for those of you who watch my live, you always hear me talk about the RSI. All right. I'm making sure everybody on YouTube and TikTok can see this. So let me show you what this RSI is. So let's take a look at here. Let's take a look over here when we're in an uptrend. So we have a crossover here and we start an uptrend, right? And the stock is going up. Red line, the moving averages, red lines at the bottom pointing up, green line at the bottom pointing up. Now look at this RSI, this purple line. So you see this red dotted lines here. This is like what we call, let's say, the mid mark, right? And as long as our purple line, which is our moving averages, stays above that, we can be comfortable that this uptrend is going to continue, right? So here it is. It's, as long as we're in an uptrend, it's up there, right? It does do a little bit of pullback. And you notice as our RSI comes down lower, look at the price of the stock. When you look at how the line is, you can see that the price of the stock price, it drops, right? Now, here is where you would sell. Like once you see that RSI fall below that red dotted line, you would sell there. Okay. And when you sell there, you're waiting for it to come back up. But if you notice here, it kind of ticks back up above it. And then the very next day, it kind of ticks back down. And here you can see that it's underneath the 50 mark, well underneath the 50 mark. And then look at this. During that time frame, you see that big dip where the price actually dropped below the red moving averages, below the red line, which is a big red flag that, hey, the stock may be tanking. So here it is. The stock went down, and then guess what happens? When the stock came down, our moving averages, green line is still on top, red line's on the bottom, right? Would you sell? No, you didn't necessarily have to sell, because you also had an area of support that's here. And this area of support, once the stock price came down, hit that area of support, it pushed it back up. And sure enough, look at this on our RSI, it went back above the 50. So as long as we're in an uptrend, so we're looking for a couple things. We're looking for moving averages, green line to be pointing up, red line to be pointing up, green lines on top, red lines at the bottom. We know we're in an uptrend. Our RSI is above the 50. If those two things line up, we are good to go. We can sit there and ride the waves and feel comfortable that the stock price is going to continue moving up. If we come across an area of resistance, we can sit there and say, well, our RSI is well above the 50. It's not close to the 50. It's well above the 50. Our green line is on top, red line's at the bottom. They're both pointing up. I'll stay in the trade because I feel like it's going to break through this area of resistance, right? And you're good to go. I normally say you want to play it safe than rather be safe than sorry. Anytime you come up to an area of resistance, you typically want to try to sell it and then wait for the stock price to close above it and then buy it again. Like here, you can see once it got there and it closed right above that area of resistance with this particular candlestick, the next day you can buy it here and then ride the waves up. Does it really matter if you lose an extra $5, $10, or $50? At least you took profit. If you made $150 or $200 on this one trade, and then you sell it, and then you buy it the next day again when it opens up above it, and you left only $25, $50 on the table, it doesn't matter. You just put $100 or $150 in your pocket, in your bank account. Okay, so every dollar counts. But the RSI gives you that clear indication. Now, I want you to pay attention to when we go into a downtrend. Okay. So here, when you look at this line here and you line it up with the price in the RSI, look, the RSI is an early indicator that we're in a downtrend because look, the RSI dropped below the 50 right about here. See, right about here, the RSI started dropping and it stayed below the 50 right here. And so you got that early indicator that look, this we are about to go into a downtrend. That's what the RSI told us. So if you see that and you put in an options put or you short the stock, you're pretty much good to go because from that point it went over above the 50 just a little bit, but then it came right back down and it kind of stayed right there. And it kind of look while we're in a downtrend, it just stayed below it. Okay. It did peak up above it a little bit, but then it just came right back down. So this is how you use the three indicators: support and resistance, the RSI, and your moving averages. All right. And when we are in a clear downtrend with your RSI, plus you have your moving averages, red lines on top, green lines at the bottom, and you come across these areas of support, you can feel comfortable that the price is going to continue breaking through them and continue falling. Okay. Until we have a consolidation here. Now, here's this remember this section right here. We talked about this earlier in saying that this can be kind of like a false red flag. Now if you are patient and you don't think and you don't try to outsmart and predict the market, guess what you would do here? If you sat there and say, well, I think I'm just going to buy it because the stock price is going to like bounce up and whatever the case may be, you could be tricked. See, but look here, the price, when you look at our RSI right here, the RSI on that day was here, it was pointing up, but then it just dropped the next day. So you know, that's why I say you don't. And even though the RSI was above the 50, you may say, oh, well, the RSI is above the 50, so I can buy it because it's like it may be going into an uptrend. Yeah, but look at your moving averages. Red line's still on top and pointing down, so you wouldn't buy it. So as long as you stick to those rules that and these that I teach in the course, moving averages, RSI, support and resistance, as long as you stick to the rules, your win to loss ratio will be your win to loss ratio will be extremely high. Trading could be something extremely simple, extremely easy. You just have to be patient. You have to not be greedy. If you are trading and the profit that you make from trading, you expect to pay this month's rent or pay a light bill or, something like that, you're going to get anxious and you're going to feel like you have to make money. You have to make money because you have to use that money to pay a bill. Any money that you're going to be using to trade should be disposable income and income that you don't necessarily need. This way, if you jump into a bad trade, you can actually stay in that trade for an extra week or 2 weeks and do other trades with the rest of the money that you have and not necessarily break your brains, break your brains over that. So let me kind of give you guys an example of that, like something that I'm going through. Like here, I have my watch list, right? And this is trades that I'm actually currently in. I will give you guys a really good example. Like this particular trade, um, I jumped into. Okay, so we're on a daily time chart. Yeah. Okay, good. All right. So I have an options put against this trade, right? And I jumped into this options put right about here, like no Monday. I jumped into this one on Monday. I jumped into this one on Monday when the stock actually closed. No, Friday when the stock closed below this area of resistance, and you can see my RSI. It was showing that look, the stock is going to continue dropping, right? And I I put a short trade, an options put, saying that stock is going to continue coming down, and I'm okay. I felt very comfortable, right? But I did it a little bit too early, and the reason why I did that a little bit too early, and this is not something, and because I didn't follow my own rules, right? Look at this: my moving averages, green lines on the top, red lines at the bottom, right? But I didn't follow my own rules on this one, so I got into this trade. But when I got into this trade, because what was this one? I got on. No, I'm sorry. Yeah, when I got into this trade not on our daily time chart. I actually got into it on my 15-minute time chart, where the moving averages. Let's see if I can find where I got into it here on the exact spot. Yeah, I would be a bad teacher if I was like, hey, yeah, I got into it here. I'll show you. We were on a 15-minute time chart right about here. Yep. So this is where I bought it. Was it here? Tuesday, that's the 25th, 29th? No, I went back too far. and Friday. Yep. And right about, yep, this is where we got it right here. So I bought into it right here, right? So as you, let me move this over. So I bought into it right about here on a Friday. I keep moving too fast. Yeah. Friday. Yeah, there we go. Friday. So I bought it right about here on a Friday. And what happened was the stock should have continued coming down when I looked at it on our daily time chart, right? Because I saw this. Yeah, this is it much better right here. So I'm sorry. Let's put it right back out. So what happened was I bought it. And when I bought it, it was because of this curvature right here. You can see I'm back on our daily time chart. I bought it here on Friday. It broke below this area of support. The RSI was well below the 50. Only thing was our moving averages. The green line was on top, but here you can see the green line started to do the curvature where it was going to start dropping, right? And we had the red lines at the bottom is pointing down, green lines pointing down. So I know that it's going to probably cross over. And I bought it early. But you notice it did a pullback. It did a pullback over the past couple days. And I'm still in this trade right now. And sure enough, 7 days, later, it finally crosses over. Look at this. It finally crosses over 7 days later. And now my RSI is still at the bottom of the 50. Now my green line's on the top, and it's going to take another by Monday. I think tomorrow. I'm sorry, today is Wednesday, right? Yeah. So tomorrow, this stock right here should be dropping. It's going to break back by Friday. It's going to break back below this area of support, and the stock is probably just going to continue tumbling, right? Um, I didn't follow my own rules on this one, and I did this one as a trade because one of my students wanted to know how to do an options trade, and I said, well, let me show you guys what not to do, and I did it, but I didn't follow my own rules. But I knew that the stock was going to end up dropping anyway, so I felt very comfortable. I can't say I knew, but I felt very comfortable with everything that's going on. And this is a stock that I've traded several times over, and this is a typical pattern for the stock. Um, but this is something that you don't want to do, because imagine if I was a brand new trader and I only had $300 to $500. I would have been stuck in this trade for 7 days, not making any money, not being able to move my money around or anything else like that. But because I'm using disposable income, and this is a stock that I've only put in a certain amount of money, but I have funds that I'm trading I'm in other trades with, I'm able to do that. If you're somebody who's only got 300 to 500, you don't want to do something like that, because your money will be tied up for 7 days. Or what happens is you would actually end up selling in a loss so you can take out your money, because you get nervous and you want to put it somewhere else. Okay. So as long as you stick to your trading strategies, you'll more than likely be fine. All right. So I'm not going to have this live be much longer. I just wanted to kind of touch on indicators so you guys can understand the importance of it. And if you see somebody who's trading on social media, or somebody who's telling you to trade, and their charts look like this, where there's no lines, there's nothing, and it's just blank, and they're just drawing lines and saying, yeah, because of this candlestick chart setup, this is what you do and this is what you do. Um, you know, Here's something that's really funny. Let me see here. Let's see if I'm gonna move this over. Let me see something. I'm gonna move this over on YouTube so you guys on YouTube can see this. All right. And I think, yeah, let's see here. Yeah. So we moved this over so you guys on YouTube can see this. And I'm going to move the camera so you guys on TikTok can see this as well. This is something that's really funny and interesting that I kind of noticed with a lot of influencers online. All right. So you guys see this area right about here, right? So when you look at the influencers online, you'll see how I have these. Okay, so when I hit these little icons over here, you guys may not be able to see it too clearly, but there's these little eye icons, right? When I click on them, you can see all of my indicators. But then when I hover over them and I click on these little crossed out lines here, the indicators, they kind of disappear, but you're able to see like these little circles, like looking like an eye with a cross dot on it, right? Now, what I want you guys to understand is this. when somebody's online on TikTok, Instagram, or whatever, and they're showing you their charts, look in the top right hand corner. And if you notice these right here are hidden, understand that they're BSing you. I'm sorry, understand that they're BSing you, because you guys on YouTube couldn't hear me. I get a little excited sometimes and I forget I have to talk into the mic. When you see that happens, understand that these people are BSing you and they're just showing you some BS garbage and saying, oh, look, just draw a line here. And then as soon as they turn off the camera, all of their indicators, they put them back on the screen so they can see them. But they don't want you to see what indicators they're using, because then it seems like they're not as knowledgeable as they're trying to make themselves out to be. Like, oh, yeah, we're going to, buy it here and put a line here. And this tells us we need to buy and sell. No, if they actually show you the indicators that they're using, their charts more than likely look like this. Okay. And that's something that I kind of notice and I laugh about. So yeah, pay attention to that, guys. See if you see those little icons turned off there, and that's their indicators. And then ask them, why are you not showing me your indicators? What's going on? Are you trying to keep a secret, trying to tell me yourself, or are you trying to sell me something? Because it really doesn't matter if you can see their indicators. If you don't know how to set it up properly, then you're basically because there are so many different types of indicators. I'll show you an example here. All right, I'm making this live a lot longer than I actually wanted to. So these are some of my favorite indicators. These are some of the ones that I use. But just to kind of show you right here, like, these are all indicators that you can get on TradingView, and there are some of them that are extremely so you got to know which ones you can use, because you can put on an indicator and it's a complete garbage indicator. It's not going to help you do anything. And then the second thing about it is, you can put all these indicators on your chart, but if you don't necessarily know how to use them, then you're going to have a beautiful looking chart with nice indicators, but you don't necessarily know how to read them, how to tell if they're good or they're bad. And that's one of the reasons why you always hear me say, you know, if you have, if you are new to trading or you've never traded before, I always recommend that anyone who's interested in trading, sign up to Udemy and take up my course, which is called Stock Trading Simple Beginner Guide. Okay. Like I said, my course is a little bit more expensive. It's $99. My course is never on sale. But you do get access to me, where I give you my WhatsApp number. You can call me, you can text me within 24 hours of signing up. I'll reach out to you and say, hey, what's going on? And if you can tell, it's one of the highest rated courses out there. And just to kind of show you guys something here, if you actually was to just put in, like, copy and put in like something like stock trading or whatever case may be, just so you can see all the different courses out there. Now, remember, Udemy is one of the largest online learning platforms. You can learn anything on Udemy. You can learn stuff from trading and everything else. And if you notice, my course is right over here. Is still one of the highest rated courses on Udemy for stock trading and teaching people how to trade. There's a lot of other great courses on there. Like, take for example, this course is a really awesome course. Right now it is on sale. You can get it for $22. I would recommend, look, if you don't want to pay the high prices, mine, sign up for this course, take it. You're not going to get direct access to the instructor where you're going to be able to text him, call him, and ask him questions. And he doesn't necessarily have like a lot of lives like that, or live videos, but it's a good informational course where you can learn a lot. But with me, you do get access to me. I do lives. Like today, I don't have any private online courses with any of my students. That's why this live is a little bit longer than normal, the other ones I do, which are 30 minutes. But as a student, you will be able to sit there and send me a message, say, hey, look, I really need a one-on-one teaching, and I can show you stuff one-on-one, and there's no extra charge or extra fees for that as well, because you are a student of mine, and I want to build a community where, like, all of us can, create a disco course where we're all, like, not disco dancing, but a Discord, where we can actually sit there and we can talk, we can chat, and we can share information and trade live with each other, and share information with everyone within the community. That's something I want to create, and that's something I'm going to be getting to my over 800 students about, and seeing if we can set something up like that. So that's it for today, guys. I had to plug in that because, like I said, I'm not an influencer. I don't make money on TikTok or YouTube or anything else like that. I sell the courses and I trade for a living. So guys, have an awesome day. See you guys tomorrow, same time, same place. Later.